Oh, 2 seconds, guys, 2 seconds. That is going to look better. Okay, good afternoon. It is 12:39 on Wednesday, the 22nd of November, 2023. Good afternoon. Apologies for the little lapse in having things queued up there. Um, it's amazing how many little things there are to do, and whenever you've been kind of busy doing something similar elsewhere, and then you come back to what was kind of your original project, and you think, oh, this is dead simple, it's wee buns, there'll be very, very little to it, and you're sitting there all complacent, and then next thing your intro video fades to black, and you're like, ah, holy Frank, I've got nothing lined up. But anyway, yes, moving swiftly on. So, if you read the title for the stream this afternoon, you will have seen me admit the fact that, yes, in last week's video, the price for the S&P 500 had just tipped over the £69 mark. To be quite honest, I don't remember the exact figure, but we can probably get it in the notifications. Just bear in mind there's 11 notifications this week, and I'm just going to have a look at the... so it was 69.005 was the price we paid last time. It has fallen slightly. It's now, if you were to round it off, it's £68.90. As is... With that said, I mean, if you look at the candles, although you can kind of see a slight rise in the past above the current price point, there's little in it, and in fact, there's been so little to really say about it or whatever that it doesn't even show. You don't even see any red there. So yes, price a little lower now than in last week's video, but on the whole things look positive. Even looking at the statistics underneath there, albeit it says the price at this moment in time compared to this time last week is up by 0.15%. I don't actually remember, was it Tuesday or Wednesday last week? Or maybe Thursday that I did the video. But anyway, either way, there's been little change since then. Up 0.2% for the day so far. And the other figures are self-explanatory there. So let's go back to the notifications before I forget. Actually, just to say, this is year 1, week 33, thereabouts. So we are making a good dent into the second year's investment journey. And as anybody knows that's watched this much, it's expected to be roughly an 8-year journey. That's how long it should take to exhaust the £50,000 that you're given to play with in the Trading 212 practice platform. That's of course unless they do away with the practice platform before the 8 years are up, or they change the amount or something like that. Time will tell. So looking at it in our notifications, Sage Group is up 13%. Excuse me while I clear my throat. Hopefully that's better, I don't know, but so the Sage Group up 13% on double-digit revenue growth and 350 million share back. That sounds impressive, although I don't know enough about the company to know if that's only a drop in the ocean. Palantir declines. This is interesting. Palantir slides 7% on lower than expected NHS contract value. Palantir, as far as I can see, some kind of intelligence-linked AI forecaster provider, government linked, big enterprise, big data gatherer. Correct me in the comments if that's not how you understand Palantir, but a bit of a kind of a black box company that it's not entirely clear what they do, other than that they've got massive revenue, massive contracts with ginormous concerns, whether governmental or industrial, and it's almost strikes me as the sort of the AI black box of the market, and particular in particular the fact that they just seem to be, data seems to be their business. So anything that relates to Palantir, I think, is well worth looking into to try to understand how things are changing. Moving on, biggest stocks mentioned in there: Nvidia, Autodesk, HP, Deere and Co. Guess Nordstrom. I wonder, I don't know, I hadn't seen Nordstrom mentioned in here before. Is Nordstrom, is that related to that pipeline that I'm going to stick with the official narrative here because it's so ridiculous. The official narrative is that the Russians had, I think actually was there a couple of pipelines, Nordstrom 1 and 2 or something like that, and allegedly they blew one of them up, if I remember rightly, according to the official narrative. I have to stress that was the official narrative. The Russians decided to blow up one of their pipelines that was carrying, was it gas? I think it was a gas pipeline, and allegedly they blew one of them up. There you go. No doubt if you believe that, you watch the BBC. Moving on. Lowe's is down 3% after cutting full year guidance over pullback in consumer spending. Symbotic. Oh, right, okay. Symbotic. Soars. Get the direction right. Symbotic soars 22% on stellar quarterly results and new customer additions. Sonova surges 8% after lowering profit forecast less than expected. Okay. Here's another biggest stocks before earnings. Lowe's companies, Medtronic, Zoom, Baidu, Best Buy, analog devices. High volatility. BA takes off. Haha. Boeing rises 4% after Deutsche Bank upgrade on higher deliveries outlook. Okay. Please forgive me while I pause my optimism. Was it not Boeing that had rushed the delivery of a particular passenger airliner in the not too distant past, only to discover that there was some kind of an issue? I forget exactly what it was, but it was as if the autopilot thing was going to be, in certain circumstances, it was basically being put into conflict with the pilots, or it was indicating that they should, for example, pull up, but not take an account of the airspeed or something, and essentially making a stall situation inevitable. I don't recall the exact. In fact, no. I'll tell you what. Was it not the case that the thing was actually raising the nose without adequately increasing the thrust or something? I forget the exact thing, but as far as I can remember anyway, there was a couple of catastrophes in fairly quick succession, same model of aircraft, and had to be recalled to get changes made, if I'm not mistaken. So yeah, as I say, forgive me while I pause my optimism. I know they are one of the leading aircraft manufacturers, but at the same time, guys, there can be absolutely no excuse for not testing these things to the nth degree. I honestly just when I say that, I'm just thinking out loud. Would that issue have arisen if it had been run through a simulator on a number of occasions? How many flight hours in that simulator would it have taken to to throw that up as a hazard? Possibly too many to be realistic. I don't know, but it is a question that has occurred to me. Right, high volatility. Microsoft new hire. Microsoft's up 1%. Now, in terms of a company the size of Microsoft, a 1% shift is significant if it is attributable indeed to the hiring of former OpenAI CEO Sam Altman. He is set to lead the AI team at Microsoft. High volatility. Bayer down 18% after halting late stage drug trial and considering restructuring. Do you know what? I actually, whilst Bayer has gone down here 18%, actually I'm going to say, do you know what? They've done the right thing. Because if they have halted a drug trial, they have done that for very good reason. And irrespective of whether it was early stage or late stage, this is nevertheless important for public health and safety. And in fact, they should be congratulated rather than ditched for their recognition of the fact that whatever the drug trial was, it wasn't going well. So yeah, I would actually say on the basis of that, Bayer, if you are interested in pharmaceuticals, Bayer is perhaps one to have a serious look at, because on the back of what they have done here, it does look like a company that may have a good perspective, long-term future, whereas others who just seem to be determined to press ahead, irrespective indeed of risks and early red flags in the pursuit of profits. I think they're putting their shareholders at risk in the long term because of the potential legal ramifications. So quite frankly, I would ditch your Pfizer, Moderna, and I would consider Bayer if I were to give advice, but I cannot do that. I'm not qualified to. And if you need advice, you should always contact a qualified professional. I'm sure everybody knows that by now. Upcoming holidays. Tomorrow is Thanksgiving in the United States. The S&P will be closed. And they will also be closing early on the 24th. My goodness, what part-timers they are. Just kidding. I know that the Americans work typically much harder than we do in the UK. Guys, let's get on and do our weekly investment of £120 of stock in the S&P 500 exchange traded fund. Really very good of it to finally give me the window to make the purchase there. Thank you, Trading 212. So there we go, £120 should buy us just under 1.75 shares. Let's see how that goes. It's the Vanguard version of the S&P 500 exchange traded fund that I'm making use of. We will send the buy order. We will watch for it executing. It just has 68.91 per share. And the figures have updated on the right hand side. So we now have a current portfolio value of just over £11,000. The return on investment is 8%. As things stand, the average purchase price has been 63.78, and current price as things stand at this moment in time, 68.89. Guys, that is pretty much it for the moment. Next week it will probably be, give me a sec. Oh no, I haven't got it. Have I got a diary handy? Let me just check my pockets. It's always good to know when your next broadcast is going to be, at least that way people can plan. Next broadcast, I'm going to say probably Wednesday the 29th of December. So exactly a week from now, which would be good, because I prefer to have things running roughly weekly. So yeah, if you're available and you happen to notice that the stream is live, why not come along? You could always fire a comment into the box. There is a live chat available. You could give a thumbs up. You could subscribe to the channel. You could even share it with your friends and family on social media, should you wish to do so. I don't really think that very many would be interested, but nevertheless, fire isn't for everyone. But for those of us who are enticed by the attempt, it is really a very seductive idea indeed. I don't know if I've actually said here before or not, but my personal target for fire is in about 10 years' time. That will put me at age 57. Hypothetically speaking, from that point, I probably could access my pension, taking quite a hit on it. But that is not my intention. My intention would be to leave it alone, to let it continue to increase, and also to wait until such times as either I can afford to take it at full value, or the hit on it would be significantly less. Now, with that said, I am going to point out, because it is relevant, I suppose, in terms of giving full and complete information, or whatever the expression is that I'm looking for there. Basically, in being open and honest, there is a small part of my workplace pension that I can access from age 60. It's probably nowhere near enough to live off, but nevertheless, it is fact that there is part of my pension that I can access from age 60. So by leaving work at age 57, hypothetically, I would only have to bridge 3 years before I can start accessing that part of my pension. The bulk of my pension wouldn't come payable until age 67 normally, and of course at that time my state pension would become payable also. From memory, from the last time I looked at my state pension, I am on track to receive a full UK state pension. And if I continue to work until age 67, that would be the case, but not until I reach 67, obviously. So that's the full, frank, open disclosure, etc., etc. Guys, it is almost 1 p.m. It's time to switch over and watch UK column news. at ukcolumn.org if you want to really know the truth of what's happening in the world. I encourage you to have a look at that. And other than that, see you again next week. Thank you for watching and have a great end to your Wednesday.